Hello, this is Michael Cheever. Today we're going to do one of my favorite things that happens 4 times a year from a professional standpoint, which is we get to understand this quarterly market that is just completed and analyze it relative to previous quarters, and specifically this quarter of last year. So real estate is a cyclical market and it moves in cycles. Well, if you look at a quarter, it's about 90 days, you're able to get a pretty good snapshot. You can look at monthly. I'm not saying don't. You can look at weekly, and I'm not saying don't. I'm just saying if you want to get an overview of what's happening in a real estate market, a quarterly, I believe, is one of the best snapshots to be able to get. The second quarter finished at the end of June. We spent a lot of money and a lot of time in creating these detailed statistics so that we're able to understand our market, advise our buyers, advise our sellers, and us as agents to be able to understand the market. So big picture, when you start off, you look and you say, okay, well, who's dominating the market? Well, there's a breakdown of the market share that the large brokerages in our market have. So Keller Williams is at 18.4% of the market share on a second quarter basis. And then there's others, and those are ranked, so you can see that in that first slide. This next slide depicts the number of homes sold. Here's the good news. Between last year in the second quarter and this year in the second quarter, there's like 1% less homes selling. So while we're all feeling it and we're getting a lot of news media and information about how bad the market is and how buyers are pessimistic and all these things, it's just 1% lower in total number of homes sold in the Metro Atlanta area in Q2 of 2024 versus last year in Q2 of 2023. Now this is supply and demand. So if you look at any market from an asset class, supply and demand is going to govern pricing. So when you look at this, that balanced market is defined as between 6 and 7 months of supply. Now what that means is that means that the number of buyers that are buying on a monthly basis, if no new inventory hit the market, then in 6 to 7 months, all the inventory in that market would be gone. So that's a healthy market. There's 6 months of supply based off of the demand in the market. Now, if there's less than 6 months of supply, then that means that the seller has an advantage. If there's more than 7 months of supply, then that means that the buyer has the advantage. So if you think back to the last buyer's market that we were in, you've got 2009, 10, 11, that was the buyer had the advantage, right? Well, now we've been in a prolonged seller market, which has caused prices to go up and the amount of supply to go down. So what you do see in this, though, is you see that supply is increasing, right? So what that tells us, and what this chart shows us is that supply is increasing, right? Which is helpful in a market where you have low amount of supply, is as the supply increases, we move more toward balance, which again, a balanced market is evenly weighted between buyers and sellers. This next one talks about the days on market. So what you'll see is in aggregate, if you have a home that has to have a price reduction, that home is on the market for 75 days on average, which means some are higher than that, and obviously some are lower. Now, if you have a home that is properly priced, it is on the market for an average of 10 days. So what we're seeing is a pretty big disparity occurring in the market, and that is priced right or overpriced. And we'll dig into that a little bit more here as we go along. Total closed properties in Metro Atlanta, second quarter of this year versus second quarter of last year. Well, we've talked about this. There's a fairly similar number of total properties. However, in this slide, what you'll see is that the ones that had to reduce their price, and they still closed, but if they had to reduce their price, they're on the market for an average of 75 days, and that seller is negotiating on average 7% off the list price. So on a $600,000 house, that is $42,000. Now, priced correctly, they're selling for an average of 10 days at 100% of list price. We all know where we want to be on that. What that previous slide didn't show is the other thing that can happen, which is listings that don't sell. So what we see is we see almost a third of the properties that are listed. Again, remember, we're in a market that is a seller advantaged market, and we're seeing almost a third of the properties that are listed fail to sell. This one here incorporates all the properties that are listed and then breaks them down into starting off 2 categories, the ones that sell and the ones that don't sell. What we know is that 71 out of 100 sell. 29 out of 100 don't sell. Of the 71 that actually sell, 48 of them are listed and priced correctly. And again, they sell at 100% of list price in an average of 10 days. That's 23 out of those 71. And those are on the market for an average of 75 days and sell almost 7% off list. So putting it all together, you've got 48 out of 100 that are priced correctly, and those 10 days on market, and they sell at 100% on average, 100% sales price to list price. Then you've got 29 that don't sell, plus another 23 that have to drop their price. And what we find is in a market that is a massive seller advantage from a supply and demand standpoint, 52 out of every 100 properties that are listed are overpriced. And about half of those don't sell, and the other half have to drop their price almost 7% in order to sell. That's a dramatic shift from a seller standpoint. 7% off in 75 days or don't sell versus 100% sales price to list price in 10 days. So what's the moral of the story? Price the property right from the start. Listen, folks, the simple message here is know the market, be able to explain that to your clients so that the property is priced correctly from the start, and ultimately you get that property closed, you and your client's goals are accomplished, and you get paid. Here at the Rawls Group, we offer a quarterly event called Market Matters, where we go into detail with the national statistics numbers relative to our industry, and then we break it down specifically with our local market. We also have segments on luxury and commercial. We call that event Market Matters. We host that on a quarterly basis. We would love to have you join us and attend. We'll put up the invite. There's a QR code for our next one. And if you missed that, we host it on a quarterly basis about 2 to 3 weeks after the end of that previous quarter. We'd love to have you join us. Remember, we always love to hear from you with questions, and we'll address those as a top priority. Crush it and have a great day.